you the money. All right, here we go. So I'm going to show you here in the next few minutes, first of all, how to never miss out on a deal because you don't have the money to fund your deals. I'm also going to share the exact steps needed to attract unlimited funding for your deals. And it's the same exact steps that I started using and that I still use today. I'm also going to show you my complete system designed with your success in mind. In other words, I'm going to show you exactly what's working in the real world today. So as you listen closely and take notes, I'm also going to show you how to attract funding from 3 different sources. All right. Also, how to locate private money and private lenders like super fast, existing private lenders. Well, what am I talking about? So if you've got an ATM card, you can relate to this. I'm going to show you how you can use this pad, this iPad right here, to locate private lenders at the push of a button. I'm talking about my private lender data feed. We have over 12,000 private lenders' contacts information every month, and we update it. It all comes from public records. I'll be talking to you more about that, but you're definitely going to want to get the tablet so you can have access to existing private lenders very, very quickly in your own backyard. In fact, you can go into the tablet, type in your zip code, and you will find private lenders right in your own area. And I don't care where you live in the nation because it works nationwide. So I'm also going to show you the steps that I used to raise $2,150,000 in less than 90 days when I lost my lines of credit at the bank. So focus in, take notes. I got 3 promises. First, I'm going to teach you how to buy properties with none of your own money. That's right, 0 money out of your pocket. In fact, when you buy a property, doing it my way, you're actually going to bring home a big check every time you buy. Now, the reason I say properties is that if some of you, or if you are interested in doing some small apartments or some commercial properties, duplexes, triplexes, quadplexes, guess what? It's all the same money. It's all the same private money. We just structure the deals a little differently. Now, the examples that I have here in today's presentation is all about single family houses, but I wanted to just let you know, if you're interested in commercial properties, apartments, etc., it's all the same private money. I'm also going to show you how to get multiple checks on every deal that you do. You know, traditionally, you only get a check when you sell the house, right? Or if you sell it on rent to own when you get a non-refundable lease option deposit. But I'm going to show you here in just a couple of minutes how you can get multiple checks on every transaction. And I'm going to show you how to get all of your rehab money up front if you are rehabbing. Now, don't miss this point. Listen very, very carefully. Private money is not only for the ugly house business. Private money is used whenever the seller requires all the cash, right? So if you've got a pretty house and they won't sell to you on terms, in fact, my statistics show that only 13% of for sale by owners will sell to us on terms. Or what do the other 87% of the people require that's got pretty houses? They require all the cash. So whether you're doing an ugly house, you're doing a pretty house, when the seller requires all the cash, you're going to use private money. I have some students once in a while will say to me, well, Jay, I don't need private money because I'm just going to stay in the pretty house business. I don't want to do rehabbing. Well, guess what? As I just said, private money works when the seller requires all the cash, whether it's a pretty house or it's an ugly house. So you need to start taking notes now if you haven't already. Who or what exactly is a private lender? Well, a private lender is a human being, an individual just like you, just like me, that loans the real estate investor that loans you money from their investment capital or their retirement accounts. Now, this is a very, very important point. Don't miss out. This is an actionable item. You need to establish a relationship with a self-directed IRA company. I recommend Quest. They're out of Houston, Texas, Quest. They are fantastic on customer service. I get my deals funded within 3 days. The reason you want to have this relationship in place with a self-directed IRA company is because when you're talking with a new potential private lender in your warm market, somebody that you know or have some type of relationship with, and you learn that they have retirement funds, you want to be able to refer them right away to Quest or whoever you're doing business with, so that they can move their funds, their retirement funds, over to Quest and start funding your deals. So a private lender is doing business with individuals. So we're not doing business with banks, we're not doing business with institutions, and we're not doing partnerships. The reason I bring this up is, the old business model is joint venturing. Somebody or the private lender puts up the money, you, the real estate investor, you do the work, and then at the end of that deal, you all share in the profits. That is not this program. We are not partnering with our private lenders. I want you to write this down. The private lender does not own the property. The private lender does not own the property. Your land trust, your entity that you're buying in, owns the property, and the private lender acts in the same capacity as a bank or another lender. That's going to make more sense here in just a couple of minutes. Also, private money is not hard money. Write that down. Private money is not hard money. Now, for those of you that have already borrowed some hard money, I'm getting ready to set you free. You never have to borrow any more hard money when you're doing the business my way. So here's some big differences between private lenders and hard money lenders. First of all is the interest rate. Hard money lenders, when COVID started coming along, they shut down completely. You couldn't even get a hard money loan, but now they have opened back up. Average interest rates are between 12 and 14% from a hard money lender. Private lenders right now, I'm only paying them 8%. So right there's a big difference in the interest rate. Secondly is what we call points or origination fees. An origination fee or 1 point is 1% of the amount that you're borrowing. 4 points, which is what the average hard money lender is charging today, that's 4% of the loan amount that you're borrowing, and you have to bring that to the closing table. Well, in this world of private money, there are no points, there are no origination fees. Thirdly, and by the way, you're already up to 18%, right? 14% and 4. Thirdly, extension fees. Hard money lenders on average charge 2% to extend the note if you have not cashed out within 9 months or a year. So now you're up to 20% on a hard money loan. My lands, that adds up fast. But in this world of private money, you're still at only 8%. The big reason is the percentage that the hard money lender will give you when you buy. It's called the advance. How much will they advance to you when you purchase a property? Well, a hard money lender is only going to advance you between 65% and 80% of your purchase price, regardless of how good the deal is. 60 to 85% is what the hard money lender will do. But guess what? The private lenders will loan you 100% of your purchase price. And if you're rehabbing, 100% of your rehab, and then even more than that to cover your carrying cost and other marketing expenses. I'm going to show you in a moment how the maximum that I borrow, but I always bring home a big check when I buy because I'm borrowing more money than I need. So a private lender is simply a one-on-one transaction between you and the private lender with no middle person involved. Now, why do you want to use private money now? First of all, we get to make the rules, right? We set the interest rate. We set the frequency of payments. We set the length of the term. Well, when I was borrowing money from the banks, who made the rules? That's right. The lender, the banker, the hard money lender set the rules. But in this private money program, you are setting the rules. And I say just duplicate my program because it's been proven to work since 2009. As I said, we're setting the length of the note. We're setting the interest rate. We can even structure deals with these private lenders to where you make no monthly payments whatsoever until you cash out on the deal. My lands, you think that'll help your cash flow? Absolutely. How about this? How about bring home a big check when you buy and make no monthly payments until you cash out. Private money is a beautiful thing. I just mentioned in this world, there's no origination fees and you are in control. More reasons why to use private money now. Closing quickly. This is a big, big point. You know, when I was borrowing money from the banks and institutions, it was 30 to 45 days before I could close. Well, with private money, you can close in 7 days or less. In fact, as I just mentioned, when I'm getting money from one of my private lenders that has their account at Quest, I can close in 3 days. Well, what's important about that is you will get more offers accepted when you can close quickly. In fact, just day before yesterday, I had a seller accept my offer $50,000 less than what they were asking because I can close in 7 days. I beat out the rest of the competition by being able to close quickly, and you will too when you're using private money. As I mentioned, it fixes your cash flow problems. And here's another big one. Write this down. No credit check. Your credit score has got absolutely nothing to do with how much private money you can get. So you can have a 425 credit score. It doesn't matter. I want you to write this down. The reason for that is because private money is a collateral loan. The reason the private lenders are loaning us the money on our deals is because we are securing their note with the real estate that you are purchasing. So your credit's got nothing to do with it. And unlimited money supply. You see, when I was borrowing money from the banks, I had a limit to the amount of private money that, or the limit to the amount of money that I could borrow and the number of deals I could do. But when you're using private money, there's no limit to the number of deals you can do. There's no limit to the amount of private money you can borrow. And there's no limit to the number of private lenders you can have. Carol Joy and myself, my wife and I, we've got 44 private lenders now spanning across the nation in 10 different states. So you don't have to just borrow money in the state that you're in. You see, you can borrow money across state lines because we and the private lenders are not regulated by the Commissioner of Banks. So it just gives you so much more freedom when you're doing your deals. Here's another big one, no personal guarantees. You know, when I was borrowing money from the banks, I had to sign a personal guarantee on every note that I signed. In this world of private money, it is the collateral that backs the note, and you sign no personal guarantees. So with private money, you really can do all the deals that you want. Now, my favorite reason for using private money is because I receive multiple checks on every deal that I do, and I don't take any of my own money to the closing table. Well, how in the world does that work? Well, let me break it down for you. Simple, simple, simple. You're going to get your first check, and I want you to be taking notes right now. You'll get your first check when you buy the property. You're going to bring home a check. My favorite phrase on my real estate attorney's check stub is excess cash to close. And let me tell you, I love me some excess cash. Well, how do I bring home a big check? It's real simple. I always borrow more money than I need to purchase the house. And if it's going to need rehabbing, I borrow more money than the rehabbing is going to be. So obviously to do that, when I'm rehabbing a house, I've got to borrow a house, or I've got to buy a house at a discounted price. And of course, Ron's already taught you how to find the for sale by owners at a discounted price. So first check when you buy. Second check, if you're selling on rent to own or lease purchase, you'll get a large non-refundable lease option deposit. And then the third check that you can get is when you cash out. When you sell the house, you'll get another big check. That's the difference between what you sell it for and what you still owe the private lender. Now, I want you to write this down. We make or accrue interest-only payments. Interest-only payments. And the reason we do that is because interest-only payments is a win for the private lender, and it's a win for you, the real estate investor, the borrower. How does that work? Well, interest-only payments to the private lender, they make more money because if you're making principal and interest payments, you're paying down their principal loan amount. And so they're not making as much money. You're paying down their loan amount. It's a win for you if you're making payments to them. And quite frankly, I let the private lender decide if they need monthly payments or not. Some of our elderly private lenders need the monthly payments in order to live on. Well, if I'm making interest-only payments, that helps yours and my cash flow, right? Because interest-only payments are smaller than principal and interest payments. So again, interest-only payments. Now, when are you going to use private money? As I said, when the seller requires all the cash. If it's a bank-owned property, a short sale, or any property listed in the multiple listing service, you're going to need private money. And when you're buying from for sale by owners, most of the time you're going to need to use private money for them because they require all the cash. As I mentioned, bank-owned property, short sales, auctions. When you buy a property at an auction, they're going to require all the cash. And as I mentioned, for sale by owners, the pretty houses, only 13% are going to sell to us on terms. The other 87% will not sell to us on terms. You're not going to miss out on any deals, whether it's in the multiple listing service or a for sale by owner, when you've got the private money, which I'm going to plug you into. Now, we've talked about why we like private money. Well, on the other side of the coin, why in the world would a private lender be interested in doing business with us? Well, here's three big reasons. First of all, they're going to earn a whole lot of money. They're going to make a lot of money. So how do they make a lot of money? Well, let me show you, for example, only your local bank, your local institution that's got certificates of deposit, they're only going to pay you right now on average 0.17% for a 12-month certificate of deposit. That's less than 0.25%. So the private lenders don't know what to do with their money until you show them in your warm market, right? There's three different categories that I'm going to go over. But listen, if they put their money in a CD for 12 months, they only earn 0.17%. When you come along and if you pay them 8%, well, that's more than 32 times, not 20 times. That's more than 32 times what they can earn in the local bank. So that's the first reason the private lenders want to do business with you and me, is because they make a lot of money. Secondly, their loan to you, their investment with you is secure and it's safe. How is it secure and safe? Real simple. First of all, it is secure because we're not borrowing unsecured funds. They're going to receive a deed of trust or a mortgage that collateralizes that note and protects the private lender. It's also safe because it's a conservative loan to value. What do I mean by loan to value? Typically, I'm not going to borrow, when I'm rehabbing a house, I'm not going to borrow more than 75% of the after repaired value. Notice I did not say 75% of the purchase price. I said 75% of the after repaired value. Let's say there's a house that's got an after repaired value of $200,000. Let's say you buy it for $100,000 using private money. Well, that's 50% of the after repaired value. I do that all the time when there's a rehab involved. Well, if I can borrow up to 75% of the after repaired value, how big of a check am I bringing home when I buy? That's right, $50,000. After repaired value is $200,000. I'm buying it for $100,000. I'm borrowing $150,000 at closing when I purchase. Well, that's $50,000 more than I need to purchase the house. Now, I'm not going to bring home a $50,000 check unless there's a rehab involved. But you see how there's a big check that you bring home. So they want to do business with us because we secure their note and it's a conservative investment for them. Thirdly, this is a really, really big point for the private lenders. Their investment with you, their principal loan amount is not volatile. Now, what am I contrasting that to? I'm contrasting the private money program to the stock market. You see, when a person invests in a stock market, they already lost money because there's fees and there's commissions, right? And the principal investment amount is volatile. When you invest in the stock market, it can be worth less tomorrow than it is today. But in this private lending program, I want you to write this down. The principal loan amount remains the same until cash out. Nothing comes out of your private lender's principal investment with you. Again, that's because we are paying or accruing interest-only payments. So the opportunities now, I mean, like never before. This side of COVID, we have got the perfect real estate storm going on. We're going to see more foreclosures this year than we have in the past 2 years. Here's why. There's two categories of foreclosures, and you're going to need all the cash when it's a bank-owned property. Number one, you got all those foreclosures that were already in foreclosure prior to COVID. Now they're opening up. And then you've got all those people that went into foreclosure because of losing their jobs during COVID. There's going to be more opportunities to buy foreclosures and bank-owned properties this year than ever before. That's why you want to get the private money lined up right now. Now, prior to COVID, there was $18 trillion in private money available. Today, there's over $30 trillion of cash available that can be used as private money. So there's plenty of private money to get. In addition to that, I got a question for you. Here's the question. Without private money, how are you going to fund your deals when the seller requires all the cash? And we know the answer to that. You're going to fund them with private money. So here's the big question. When would now be a good time to get private money? And you're answering that correctly. Right now is the time to get lined up with the private money. So who in the world is Jay Conner? Well, I know Ron has talked about me over the last couple of days. And of course, you learned about me on the virtual bus tour this morning. But 17 years I've been in the trenches, actually longer than that because we started in 2003. You see, I came to Ron in 2009. My first Quick Start boot camp was to learn all about private money. I'll tell you more about that in a second. I've rehabbed over 400 houses, actually more than 450 houses now. And thanks to Ron LeGrand, ever since 2009, Carol Joy and I and our company has netted over $1 million and now in recent years over $2 million. I've also done commercial developments. I've got a shopping center in Newport, North Carolina, right here adjacent to Morehead City, free and clear shopping center. I've consulted with over 2,000 real estate investors just like you. I've got 2 best-selling books that I've written on the subject. And of course, I'm here to be able